Let's just start with first principles. Jed, good morning. On Tesla, is it an auto company or a technology company or something different?
So good morning. I think if you asked Elon, they'd say that they're an energy company. I think, if you look at the signs and how this company is developing, it's developing to look a bit more like an auto company.
So going forward, is it basically coming into this earnings period with a bar that is just so high that there is no way that it can meet expectations today?
Well, I think just from a level set perspective, we've already got the delivery numbers. And speaking of a bar set high, so you're likely to see Elon stick to sort of that 500,000 delivery number. We think that's a virtual impossibility for Q4 because that would imply 185,000, which would be a level that not only is historically a peak, but it's about 50,000 over what they've ever been able to deliver. So if you kind of take that out of the equation and say, well, maybe they strive to that, but we're likely to get sort of that 180 type number, which is still a great result. Then I think the conversation is likely going to pivot to that of cost structure.
Zooming out, Tesla is not a story of a balance sheet. It is a story of faith. It is a story of the believers, the naysayers, and it has been continually. Is there a broader story in Tesla, an indication of froth in markets, in the eagerness for some sort of new winner in the United States? Or is this really worth what it's being said it's worth in the markets? And really, it is still more of a balance sheet story than the faith story that many people think it is?
Well, I mean, couple points there. That's probably a fair argument for many stocks, in 2020. Now, that being said, I would say for 2020, Tesla is a bit of a balance sheet. I mean, they have successfully raised a decent amount of money to shore up what was their obvious weak spot. However, the point that I think you're going towards and raising is one of which I was mentioned in terms of cost structure. So is it an energy company? Is it a technology company? Or is it an auto company was how you open that. And I think there, it's really going to depend on what the margin profile looks like. And that is where I think all eyes are going to be today, as well as next quarter too. Can they deliver these unit volume numbers and actually make money, and or are we going to see competition that's coming into the market and a need to try and drive down cost structure faster than they might be able to do, and does that result in margin compression? And I think that is going to become the bull bear, if you will, as we go into 2021.